If I download your app and I have certain gambling behavior, I bet a certain amount on average at a certain frequency, and then I spend money on your app, costs like $5 a month or $70 a year, or whatever it is. What is my payback period on investing in the app? And is there a way I can quantify the value I'm deriving from your app versus the status quo? This is just a very simple way to think about it. You have some like frequency variables. So you have like a daily gambler, a weekly gambler, a monthly gambler, and on average they're betting 10, 50, 100, $500 per bet. So this guy is spending $10 a day. This guy's spending $50 a week. This guy's spending $500 a month. If you take this person and say there's no scratch odds app and they had their original betting behavior, how much were they making or losing? And then based on if they keep their betting frequency and betting quantum the same, but their betting selection is guided by scratch offs, how does their outcome change? I would want to know that before investing in this business for sure. The second thing is like flexing the same variables, like their average bet size and their average bet frequency. How long does it take to make their money back on investing in the app? It saves them $60, but it costs them $70 to invest in the app. It may not make sense for them to invest in your app, and your market size is smaller by those amount of people.
You very quickly motor through the problem and solution without proving to me that it is indeed a problem. So I'm reading this deck and I'm like, okay, the conversion rate to matches is really low, but the top of the funnel is so big. Like people are swiping a ton and it's a low conversion rate, but dating apps are still super, super big and valuable companies because they solve a problem. Doesn't matter that the conversion rate is low because the top of the funnel is so big and they just enable access to so many people that didn't exist before. So my question is like, aren't dating apps working well enough? Like I'm still wondering that after having read your deck, which is like a big reason. If you don't answer that question, I think people will be like, it's not worth it following up with these guys.
I was definitely wondering like why this didn't exist, right? Like if I go to Google Maps now, what do I find? And like, what are they doing? Book online. All right, Brooklyn Pet Spa. Here we go. Book online. Right. So like these guys are just using their online booking application from Square. That is a competitor to you. Like why doesn't like a dedicated pet booking platform exist already? It could, right? Like there's proof of concept with this Fresha thing. Like you should find other industries where people have replicated this successfully and use that as like high level form of validation. But like people are gonna be like, why doesn't it exist already? And why can't they just use their existing modern state of the art POS system to just host a booking link on Google My Business? Because Google My Business is gonna be the center of how your customers acquire clients. So that's just something to think about. To have the highest value per slide or the highest value per word on these market slides, it should just be like cold, hard data about how big your company can be. And it should tie with the business model. And I've taken the liberty of just putting together a little spell spreadsheet where just using your like apartment building slide, you have like, there's a 43 million units. And I asked ChatGPT and there's about 2 million buildings or thereabouts, right? These are all assumptions which you can tweak around. But what the investor is going to want to see is, okay, if I onboard every single one of these buildings and every single one of these units, and I can charge them these upfront fees of $2,500, $100 per property, $100 per unit, and $5,000 per property, and I can charge an ongoing monthly total SaaS fee of like $17, which is like $200 per year. What does that mean for how much revenue my company can conceivably generate? That is your market size. And this $20 billion number, A, it's great, it's a huge market. B, and no one's going to expect you to have 100% market share. It's just saying this is how you size your market. Your market is not like how much money are people spending on prop tech. Your market is what are you selling, how many people are buying, and what is A times B effectively. And there should be a slide in your deck that ties out with your unit economics and sizes up your market.
Team should be in the back. Like people just need to, they're flipping through it really, really quick and they need to get it and be interested and be like, this is an interesting business market and model. Okay. And the team makes sense. All of a sudden I felt that I was talking about dating and then I was just like blasted in the face with a real estate guy. And I understand you have a software engineer on your founding team with these great logos and that's great. Normally I don't really care about like the placement of this slide versus that slide. But in this case, I was like, this feels like pretty misplaced to me. Just stick it in the back. It's all good. I don't know if you're a single guy, but if you are, you don't need to put that you're a single guy in the deck. But I just, especially since you're like loudly showcasing that you have experience in a sector that has nothing to do with dating or technology, I just felt that this like totally derailed the momentum that you're hopefully building early on in the narrative. What's up guys? If you're enjoying this video and you want me to roast your deck using the same principles I used to raise over $30 million for my own businesses and my clients' businesses, click the link below, send me your deck, and prepare to get roasted. Alrighty, back to the video.
You just shouldn't include any projected numbers in an early stage startup deck. And the reason is as follows. They just look completely made up, right? And it's not your fault. It's more like there are just too many unknown unknowns and the distribution of potential outcomes is just too wide. How do you know that you're going to be doing $36 million in 2027? Well, you got to that number by doing an Excel spreadsheet and tweaking around a bunch of assumptions. This number could be 100 million if you're mega successful, or you could be out of business by then. It's just such a wide distribution of outcomes with so many unknown unknowns and including projections that are always going to be up and to the right for every deck. Like why would you include anything else?
else. They look made up, and they just dilute the value per unit of content in your deck, so to speak.
You're claiming that this marketplace lacks perfect technology. Set aside the fact that this is pretty weak copy, like it's just lacking perfect tech. Like no one wants to invest in a business that's just going to make imperfect tech perfect, right? There needs to be some super acute problem. What I don't follow here is like, all right, you lead me down this narrative of taxis were bad, then Uber came along and made it good. Now you're going, okay, labor services, we had whatever existed before, like classified ads, and then these other companies came along. And I can tell you that I used TaskRabbit like a month ago, maybe 3 weeks ago, and it was a perfect experience. It was handyman and general labor for me. I just moved into my place and had a ton of cardboard boxes from all the stuff that we bought. So we hired someone to come move it on TaskRabbit, and it was pretty perfect, I would argue. It was like a perfect experience. So I think that a lot of your readers, whether they're investors or not, definitely investors, are going to be thinking about the experiences that they had with similar products when they look at your problem slide. And yeah, like there may have been a high service fee. I didn't feel any friction, but it definitely left my met my needs and was super easy. Also, you say middleman involved, higher cost, more confusion. The first thing I thought of when I read this, I was like, okay, presumably you're going to present to me how you're not a middleman, but I don't even see how that's possible, right? You're talking about how there's no perfect technology, which leads me to believe that you're going to introduce perfect technology, and perfect technology by definition is a middleman, and you need to make money somehow. So this particular point immediately made me think like, okay, but you're going to be a middleman. Like I'm waiting for you to prove to me how you're not going to be a middleman, which you may do in the solution section. But spoiler alert, I read the solution section and it looks like that's exactly what you are.
On slide 15, we get to the value proposition, and it's like, yeah, this is what I wanted to know, and this is what I was asking about early on in the deck. This value proposition, I think, will land a lot better if the problem is contextualized more clearly. Like I said, what is the status quo, and where's all the leakage happening, and how is the leakage plugged and then some by introducing this platform?
These things, investors are not going to ascribe any value to, because I already talked about the three-sided marketplace and how far away that is. Then like sponsored listings and e-commerce integration, yeah, this makes sense, and that's definitely a reliable way for you to make money, but you need scale first. So like these are all things that are valuable if, that's the keyword, are valuable if, and it all comes down to, can you get people transacting on your platform and generate revenue? Because if you can't finance the development of this, and like there's no point in going after this anyway because no one bought into this.
A lot of people have these problem sides where they make a statement like that, but it's unclear why the statement is bad. My response to that could be, they seamlessly work together, leading to fragmentation. Like, okay, I have fragmentation in my tool stack, it's not a problem. Like, why is it a problem, right? That's kind of the punchline.
It's very common for people to go into these like super fragmented industries, particularly service-based industries, and like buy a bunch of small players and like combine them into a bigger company and then sell them off and consolidate the industry. Mobile pet grooming, or just pet grooming services in general, is pretty early on the roll-up curve, so to speak. It's still super fragmented, but there is a lot of interest from acquisition entrepreneurs and private equity firms to roll up the space. It's just a business that has like super compelling end market dynamics, like we talked about. Like it's recession resistant. There's like this supply-demand imbalance. There's just a lot of transaction activity happening in the pet space. And whenever you have these service businesses, there's a lot of opportunity to like consolidate things and drive efficiency. Now I make that point because your tool is something that these acquisition entrepreneurs and private equity investors will likely have ample thoughts on. And if it's something that works, they would be willing to implement in their roll-up strategies if they're rolling up the pet grooming space. If I'm a private equity firm and I buy up 30 mobile pet groomers, I would love to all get them on one booking platform and like integrate it with Google My Business or whatever, right? Like that's an automatic efficiency lever that I can pull. So I recommend talking to these people who are acquiring pet grooming businesses about this solution would be a pretty effective way for you to validate the value proposition here. There are other platforms like Upwork that aren't doing any of these things, that aren't integrating AI and other SaaS tools into their products and are just becoming big as marketplaces unto themselves. And when I think about that, I'm like, okay, why haven't they done that? There must be a reason. Does an accountant really need their lead generation platform to integrate with all their other stuff? Maybe there can be like an export to their like QuickBooks or something. But as a business person, if you just look at like all the tools I use, like here's all my business tools, like Descript, Fathom, Loom, YouTube, Beehive, like cold email stuff, Stripe, Calendly. Like I have a huge stack of tools that some of them integrate with each other, some of them don't, but I pretty much use them all on a standalone basis, and I pay for some of them and they all work, and it's like not that hard. I just think that like maybe there is some scope to like introduce some freelance accounting super app, but this is like a totally different problem you're solving than the creation of the marketplace to solve like the reliable revenue generation problem. That's what your marketplace is solving. It's collecting the pool of customers in one place and allowing accountants to have a new and predictable source of revenue. What's wrong with, just educating dog groomers on like using Google My Business more effectively? If that's like a good revenue channel for them, I'm not sure that a marketplace, it kind of feels like a solution looking for a problem. Why do I need some like separate channel to go find all the groomers. Any business person who's worth their salt is going to invest in their Google My Business profile. That's like a foregone conclusion. Have you heard of the business called Fresha? Fresha is another similar business to you that targets hair salons. And if I'm in a new city and I need to get a haircut, you can come on Fresha and all the hair salons in the area will have Fresha profiles and I can just book directly through Fresha. I read your deck as exactly this business, but for pet groomers, which is potentially a very good and compelling business. But this Fresha is not a marketplace. It's a booking platform. Video conferencing tool in the app. Yeah, it's nice, but like, how do you know people need that? Maybe they do, and maybe it helps you keep people on app and prevent that disintermediation problem that I talked about earlier. But on Upwork and stuff, they have other ways to prevent disintermediation, and I never connect through the Upwork video tool, ever. I always do like a Zoom meeting or a Google Meet, literally 100% of the time. So I'm just concerned that this video feature may not need to exist. This isn't that differentiating. Everyone is like a marketplace with a transaction model. So like, this is not differentiating at all. This is not differentiating at all. This is like a Excel-based pivot table filtering feature. I do not think that makes you differentiated. What's differentiated is that you're accounting specific and you verify accountants. The fact that you can like search by these things, your competitor can introduce that feature in like 3 months. And then easy interface. This is another common mistake I see a lot of people making. User interface and user experience. In most cases, I acknowledge that there are some exceptions. It may be differentiated if your competitors have like shitty UIs and terrible experiences, but it's not defensible. Because if your competitors see, or there's a big revenue opportunity to capture by upgrading their UI and their UX to be on par with yours, they can wake up one day, make that a priority, and have a competitive user interface and user experience within a year. So it's not defensible. This concept of a three-sided marketplace, just be direct with you, I think you should drop it or put it like deep in the appendix. And I say that because I see this in decks all the time. People are like, oh, like investors want to see some like grand vision about how we can be like a huge company. And that's true. But any grand vision that you have for your business is like completely unrealizable unless you prove out your core business first. Your core business is just a more effective way to transact with the pet grooming industry. Okay. And if you cannot get product market fit with like the booking platform and like the app and whatever, this like three-sided marketplace is just like a pipe dream. Including it in your deck and like and diverting focus away from like the core narrative about your like problem, solution, market, business model, and traction, like the core pieces of your core business, it risks you coming off as like unfocused and unsophisticated and like potentially like lasering in on like the wrong things. This is just like a super unrealistic thing to build unless you prove out your core business first. I always coach people to like put a slide in the appendix that says TAM upside opportunities after you've like articulated what your core TAM is and how you're gonna go do it. Here's another thing that could work that we would love to build that we've seen early signs of life for if we nail our core business. Like supply side, there are a lot of accountants. Demand side, people need accounting. That doesn't at all defend the fact that your app needs to exist. As far as I know it, the accounting space is humming along just fine. There are a lot of people making money in accounting. So the fact that accountants exist and people need accounting services is not validation for your app to exist at all. Either throw this slide away or it will expose you to being challenged unnecessarily.
This problem seems pretty vague. And what I mean by that is that it's not quantified, and I don't understand what the person you're selling to is suffering from and why and to what degree. Like, I get it. People are demanding that they're sustainable and their reputation is at risk and there's disjointed efforts. But beyond that, I don't understand exactly what's happening. Like, what is the problem? So companies that are unsustainable are facing pressure to be sustainable. Okay. If they find it hard to be sustainable and there aren't good tools to allow them to increase their level of sustainability, what is the impact? Why are they worse off? Are they less profitable? Why? Is there more employee turnover? Why and to what degree?
Marketplaces, time and time again, and I know many founders personally who have suffered from this problem, face a disintermediation issue where people find business on the app and they go off app and transact off the app. Upwork has a lot of features in place to prevent this from happening when you're chatting with the freelancer, and they will scan the chat for words like email, @, phone number, anything that might suggest that you're moving off of the app. They will scan for that and like warn you that you might be banned if you do that. And that definitely reduces the amount of people who disintermediate Upwork. So if a company like a beast like Upwork faces a disintermediation problem, addressing how you won't be disintermediated, or at least building that into like your market sizing assumptions will be critical here, because that's something that people are going to wonder about. And that may even be a reason that a lot of people don't invest, because it's a big enough risk for them.
You're like forcing people to like parse through some pretty chart. I highly recommend that you just kill this slide. If you keep it in here, not necessarily going to hurt you, but it's not going to help you at all. People are just going to like gloss over this thing and be like, what does this chart mean? I have to read all this text. Just stick it in the appendix or get rid of it. And then here, you're basically just saying, I want to have a big company, just like Canva and Xero and Uber. Obviously, that's what you're trying to do. If you're trying to optimize your deck for follow-up meetings, they should be optimized to hold people's attention for as long as possible. And the way you do that is with like a very cohesive narrative where one slide leads to the next and every slide has a high impact per word. And there are a lot of slides in here like this one that are just like People are just going to flip through and you're going to start to lose interest, and some people may pass, and it'll cause your conversion rates to a follow-up meeting to dive.
Who cares? Just do a web app, do a mobile app, do both, do one at a time. Like, it doesn't matter. The fact that this is a mobile app means nothing. Like, a lot of people are sitting on their computers anyway. My hunch is that that would not be a huge barrier to people adopting it. I fear that if you include this slide, it may signal to your audience that you're not prioritizing the right levers in your business. My suggestion is to delete this slide. A mobile app is just as easy as a web app. Point 2 has nothing to do with whether it's a web or mobile app. This point number 3 has nothing to do with whether it's a mobile or web app either.
What's up, guys? Thanks for watching. If you enjoyed that video, head over to roastmysaaspitchdeck.com. Link in the description below. Send me your deck and prepare to get roasted.